Welcome to the Deep Dive. We cut through the noise to get you the vital insights you need. And specifically, welcome to the TAC Index AI podcast. Here, we blend TAC IP data, reports, charts, all that good stuff, with the latest logistics news, especially focusing on air cargo. Today, we're diving deep into air cargo dynamics, what's happening right now, how are logistics shifting, and, crucially, how does it all link back to the bigger macro picture? We'll be digging into the latest TAC Index reports, plus grabbing insights from the Wall Street Journal, Reuters, basically giving you the shortcut to being up to speed. Let's jump in.
Okay, so what's really interesting right now is the air freight market is showing some surprising strength. We were talking about what's normally the low season. The global Baltic air freight index, that's the BAI0, the global benchmark from TAC Index data was actually up, a healthy 2.2% week on week through August 11th.
Wow, okay, 2.2% up.
In August, exactly. And that means it's only down about 1.8% compared to this time last year. So that's quite a counter-seasonal move. It really suggests something's going on, maybe deeper resilience, maybe shifting demand patterns.
That really is counterintuitive. But is that strength everywhere? Because I'm looking at the regional numbers, and it seems, well, quite varied.
That's a great point. No, it's definitely not uniform.
Like overall rates from China to Europe were a bit lower, right?
Yeah.
But then China to the U.S., they were higher again.
Correct. And Vietnam saw rates climb higher to both Europe and the U.S.
And then look at London, the BAI 40 index. Big gains there, up 8.5% week on week, and get this, 34.2% year on year.
A really strong performance out of London.
But then Chicago, the BII 50, it actually slipped back almost 5% week on week. So what gives? What's driving these really different regional stories?
It's a complex mix. And it really points to capacity and this ongoing supply chain reshuffling we're seeing.
Reshuffling. Okay.
If you look back at July, the overall BAI 100 was pretty quiet, right?
Right,
Up only 1.5% over the 4 weeks. Part of that was definitely the low season kicking in, but also all that extra capacity from passenger planes. Summer holidays mean more flights, especially transatlantic.
Right, the belly hold capacity. More passenger flights, more space for cargo underneath.
Exactly. More supply tends to keep rates a bit muted.
Okay, so you have that summer capacity effect, but you also mentioned shippers reshuffling things. Is that just normal adaptation or something bigger?
Well, sources suggest it's quite deliberate. Shippers and carriers are actively repositioning. And a big driver seems to be anticipating policy changes, like the de minimis exemption removal for U.S. imports. That's coming August 29th.
The duty-free threshold for small packages. That could really hit e-commerce flows.
Precisely. It potentially means more checks, maybe tariffs on lots of those smaller, cheaper imports. So it looks like shippers are trying to get ahead of that. And, tools like the new tax-based version are getting better at tracking this capacity accurately, even on complex multi-leg routes. You can almost see the shifts day by day.
It really shows how air cargo is tied so tightly to policy, to economic currents. It's not just about flight paths. Let's talk more about those trade policies. President Trump's renewed tariff threats, for instance. How's the market taking those?
Well, interestingly, it seems the market is largely discounting the immediate impact, especially maybe because there's that EU-US agreement setting a 15% tariff ceiling on European goods.
Oh.
Seems to provide some sort of buffer, perhaps.
Trade barriers aren't just a U.S. thing, are they?
Not at all. The Wall Street Journal had a piece on Europe's free trade fumble. It highlighted how the EU basically scuppered its own free trade deal with the Mercosur countries, Brazil, Argentina, etc. Opposition from French farmers, primarily. It's a stark reminder that domestic politics anywhere can throw up major global trade hurdles.
And connecting this back to the wider economy, we've seen equity markets like the S&P 500 and Nasdaq hitting record highs recently.
Yeah, a lot of that on hopes for a Fed rate cut in September.
And supported by that big resurgence in tech, especially AI, NVIDIA, Microsoft. Those stocks have recovered strongly.
Absolutely. And that boom in high-value tech often needs fast shipping, which means air cargo demand. It fuels that optimism loop. And you see strength elsewhere, too. The DAX index in Germany is performing well, possibly anticipating growth from new defense and infrastructure spending.
So despite the trade noise and the regional ups and downs in cargo rates, there's this undercurrent of maybe cautious economic optimism, particularly in sectors relying on air freight.
It certainly appears that way. These tech and growth sectors often drive demand for that speed and reliability air cargo offers.
Okay, so wrapping this up, what does this all mean for you listening? We've seen the air cargo market is, well, it's complicated. It's this web of regional trends, shifting capacity, all tied up with global trade policy. The health of air freight isn't just numbers on a chart, it's really a barometer. It tells us something about economic confidence, about political decisions,
Hmm.
which leaves us with a big question, right? As these supply chains keep reshuffling and trade policies keep changing, how will that delicate balance between air cargo rates, capacity, and the wider economy, how will it evolve next? What new ripples are coming? And how might that affect everything from your online orders to the price of your next gadget? Something to think about.